Hi there, welcome to Kneppy Invest. In this financial year 23 results video, I will be featuring Suncorp Group. This is not a viewer suggested video. And the reason I say that is because on the 6th of September, I did release a video requesting suggestions of companies you like me to do a financial year 23 results video on. And I have received quite a few requests or suggestions. Last time I looked, it was about 38. That was at 9 a.m. on the 7th of September. So I think I will start this process of doing these viewer suggested videos on Saturday, the 9th of September. And then I was thinking, how will I choose what company to do first? Should I just do it in order of comments? So the first comment that was put on this particular video, and I'll put the link to the video up somewhere because it's very important that you watch it, because I do have two rules and I won't mention those rules right now. So I was thinking, what order or how should I choose the companies? And I thought, let's just do it randomly, because eventually my aim is to do a video on every single company that is suggested, apart from those who select companies outside my rules. Now, for those who are selecting more than one company, I'm just going to pick either the first company or the most profitable, the best company with the most revenue, that sort of thing, because we did have a couple of comments with three companies that were selected. So what I've done is I've written down all the names of companies onto a piece of paper, thrown all those pieces of paper into my Yellowstone hat cap, and I'm just going to choose one company at random. So let's do that now. And this will be the video, the company I'll do a video on, we'll release that video on Saturday, the 9th of September. So let's have a look. And the first company I'll be doing a video on is CLG. That's Close the Loop. I'm very excited to be doing a video on that company because I have thought about looking at that company a little bit more closely based off their results. So congratulations to whoever chose Close the Loop. But don't fret, if your company hasn't been chosen right now, more than likely I will do a video on that company. Now on to Suncorp Group. Now, there is one reason I've chosen this company, and the first reason is because they released their results fairly early on. I wrote down all the names of all the companies in order of when they released their results, and this was one of the first companies, and that's the only reason I selected Suncorp Group. Now, when I did actually have a gander at their results, they actually did look quite impressive, but that was to be expected. And for those who don't know, Suncorp Group is into banking and insurance. However, they seem like they want to sell off their Suncorp Bank to ANZ. This was about a year ago. But the ACCC does have a few problems with that particular transaction. And last time I looked, Suncorp Group wanted to have this tribunal in regards to ACC's decision. So I don't really want to talk about that because I don't want to focus on that part of the company, because we don't know if that particular transaction is going to go through. The whole point of this video is to have a look at this company's results. So let's have a do that. Let's do that in this video. On the day a company typically releases their results, I have a very quick look at the revenue and profit, and then I move on to the next results released by a different company, because we are given a plethora of announcements being released during August. Now it's quieted down, and so I have way more time to look at the results from companies. And on first glance of Suncorp Group's results, they were quite good, particularly revenue growth and profit growth. But this was to be expected. The market expected some pretty good growth in both of these metrics, simply because insurance companies right now are going through a bit of a period where they are experiencing some really good tailwinds. So revenue up 14% to $18.4 billion. Profit up 66% to $1.2 billion. Operating margins up to 18.6%. Last year, they were about 8%. So that's a significant increase in operating margins. Operating cash flow, free cash flow, the same, around about 742 million. And this company, and I probably would argue that the main reason you might be holding this company in your portfolio is because of the dividend. And the dividend yield for Suncorp Group is 4.4%. And the main reason I say that is because when you look at the long-term history of this company, they haven't really experienced much revenue growth over the last 10 years. And it's really only the dividend yield that is or should be attractive to investors. Return on equity for Suncorp Group is at 8.9%. And to be fair, I wouldn't expect return on equity or return on invested capital to be high for this type of company. And I would never, ever call Suncorp Group a high quality company. I have my own definitions, what determines whether a company is high quality or low quality, and Suncorp Group would not fit into that definition. And historically, both of these valuation metrics, or not valuation metrics, I call them quality metrics, have been quite low for Suncorp Group over the past 10 years. $13.3 billion of equity, which is something I will look at for most companies, particularly banks. Particularly banks when we are possibly moving into a recession. Shares on issue 1.27 billion, which means at a share price Suncorp Group is right now, the market cap of this company is 17.4 billion. And it's really important to note that if this transaction does go through with Suncorp Bank selling it to ANZ, I think the price they are asking for is about $4 billion. It'd be really interesting to see what management do with that extra money. I suspect they will give a special dividend or return back to their shareholders, because I would say they wouldn't know what to do with $4 billion of extra cash. So keep that in the back of your mind, particularly if you are a significant income investor. Now to valuation metrics. And what I do with valuation metrics for low quality companies is I compare the valuation metric number right now to historical ranges. So for instance, about 6 or 7 years ago, I bought ANZ Bank because the P ratio of that company fell below 10. And whenever the P ratios of the banks, particularly the weaker, lower quality banks like ANZ, Westpac, and NAB, fall below 10, that was a time to buy. But you don't hold them forever, because eventually share price will go on a rally and the P ratio will go up, and that's when you take your profits. So what I did with Suncorp Group is I just looked at the P ratio, which is 14.5, looked at the PB ratio, price to book ratio, which is 1.31. And then I looked at the last 10 years of those two metrics for Suncorp Group. So for instance, the price to book ratio 1.31 is sort of at the high end of the historical ranges for this company. In fact, typically the price to book of Suncorp Group is between 1.1 and 1.4. If it ever went above 1.4, there was an argument that this company is overvalued. And the reason why the price to book ratio is getting at the high end is because of a pretty good run or trend in the share price over the past year. We'll have a look at the chart later in the video. Price operating cash flow, 23.5. I probably would ignore that for Suncorp Group. I also did a reverse DCF. Now, to justify the current valuation or price of Suncorp Group, and this is on the back of expecting a 10% return over the next 10 years, this company will have to increase earnings per share at 9.5% per year. But the problem with that is that does not include dividends. So if you do include dividends, your earnings per share probably have to increase at, say, 5% per year. And Suncorp Group over the past 10 years has really struggled to get that sort of earnings per share increase per year. In fact, earnings per share have only increased at 1.6% per year. So this company will have to perform better over the next 10 years than they have in the last 10 years to justify the current valuation of the company. In fact, over the last 10 years, this company has given their shareholders a 6% return. And that is probably on the low side of what you would want. So this company would have to simply do better than what they have done over the last 10 years to justify the current valuation. And really, you can see that lack of performance when you look at the revenue history of this company over the past 10 years. Not only the revenue history, but also the operating margins. I've also included profit on this particular graph. So the main thing I look at, and the first thing I look at whenever I'm researching a company, is I look at revenue growth. And over the last 10 years, revenue is just stagnant. It's going sideways. Now, this company does have some good years and some bad years. And there is potential. Financial year 23 was one of those good years for this company. And the big question moving forward is whether they can continue this momentum over the next few years. And based off the last 10 years, I'd say that is more than likely not going to happen. So revenue going sideways. Revenue per share has actually been going backwards because shares on issue have actually slightly increased. And probably the most disturbing thing when I look at this particular chart is that operating margins have been falling. In fact, the best operating margin year was back in 2014 at 21.7%, and right now in 2023, 18.6%. A nice bounce from last year to this year. In fact, it went from 8.2% to 18.6%, but that could be just a one-off, a good year for Suncorp Group. And if you have a look at that profit, you can see even profits going sideways. They also have some good years, some bad years, and financial year 23 was actually the best year, just ahead of financial year 2015. So no growth or very little growth for Suncorp Group. And that's why I think this company will struggle over the next 10 years to get that expected return of 9.5% earnings per share or 5% earnings per share and say 4.55% dividend yield. I do think this company will struggle to give you the returns you desire, to give you returns that beat the overall market. Another thing I should have mentioned is that dividends for this company have been decreasing. In fact, over the past 10 years, the dividends have decreased at 2.1% per year. So if you are in this company for the income, keep that in the back of your mind that dividends are not rising for Suncorp Group. And really, just by looking at the chart, we know this is not a high quality company. So this is the weekly chart over the past 10 years, and the share price is flat, going sideways. Now, there are periods of time when the share price has gone down a fair bit. That was during the COVID-19 financial panic. That's the time to get interested in Suncorp Group, when the share price fell all the way down to $7.50. And whenever the share price gets above, say, $15, that's the time to get a little bit wary. And right now, the share price is trying to rally up towards that $15 range. Right now, it's around about $14 or just below $14, but the share price is in an uptrend. And in fact, the share price has been in an uptrend for the past 9 to 12 months. The whole reason behind why the share price is an uptrend is because the market expected really good financial performance from this company in financial year 23. The question is, moving forward, can they replicate that good financial performance in financial year 24 and into financial year 25? That is all I have for my look at Suncorp Group's financial year 23 results. Now, just because I would not be a long-term holder of this company doesn't mean you don't have to be. You could have a completely different opinion of mine. I could be completely mistaken when it comes to Suncorp Group, and maybe they've just started into a new growth phase. This company did experience a growth phase before 2010, if I remember correctly, a really significant increase in revenue. And even the chart back then looked really well, sort of between 2000 and 2010. I believe, if I remember correctly, the share price increased from about $2 in 1994 to a high of $24 in 2011. But over the past 10 years, this company has really not grown at all. But I would like to hear different opinions than my own. So if you are a long-term holder of this company, I'd love to hear your opinion on why you have decided this company belongs in your long-term portfolio. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.